Trump and team included and upped the ante on Chinese tariffs to 104%. And in response, China retaliates with 84% tariffs on US goods. And I think at this point, it's fair to say that we are in a full-blown trade war with China and potentially other places as well. However, one piece of positive news is that it seems like several other countries, notably places like Japan, the EU, Vietnam, and South Korea as well, seem a little bit more open to the idea of potentially negotiating with the Trump administration on trade relationships. So there's some good, some bad in all of this craziness, but I want to talk about the latest in this market and whether or not this is just on the brink of falling through another key level of support we've been finding around this 5,000 level for SPX. Now, the first thing I want to say about this is, again, I actually had some criticism on one of my recent videos here, people pointing out that I've been trying to call a bottom on the S&P 500. And I guess to be fair, I have been saying that this is starting to look like we're trying to form a bottom, but let me be very clear. I am not bullish on a short-term basis on indices. I did try to get long over here, but I stopped out of those ideas and have not taken any short-term long positions on the NASDAQ or S&P 500. The reason I point that out is that I've been indicating in my videos that long-term I've been buying some shares that I like in my long-term stock portfolio, but there is a big difference between long-term investing and short-term trades. Let me be very clear. This market is still very much in a downward trend, and I don't think we will put in a bottom until we get some sort of positive trade war news, especially from China, and with that, a series of higher highs and higher lows. So let me just be very careful. Again, I recognize that sometimes people only hear one portion of my video where they hear me say I'm buying the dip, as in I'm buying long-term stocks, but it is a big difference between buying long-term stocks and looking for constructive higher lows and higher highs to actually take short-term trades with tight stop losses. Two very different ideas. In terms of short-term nature, however, I will indicate that I am not bearish on the S&P 500. I do actually think that shorting this is a lot harder than it looks because everybody's kind of doing that. And we can see that evidenced in the Edge Finder's put to call ratio. You can see this thing continues to be parabolic to the upside, showing that the demand for puts right now greatly outweighs the demand for calls. We would put this in the extreme fear category, and pretty much everyone is bearish out there on markets. Also tonight, we get the latest AAII investor sentiment survey, which I would be shocked if it was not just as or nearly as bearish as we currently are. You can see for several straight weeks, investors have reported feeling very bearish overall on the markets. In fact, I've not seen these levels of bearishness from the crowd in quite some time. So yes, long-term, I do think that this is an opportunity personally to add some names into my portfolio. I've bought a selection of stocks and will continue to buy more of them if they do go down. But my point is there is a big difference between that and short-term trades. Let me talk about a constructive trade that I'd be looking for on the S&P 500 just to net this out. So we put in a high yesterday and completely failed, right? So what I'm looking for is something like a move like that, where we get these very sharp rallies, but that we actually hold those gains and bears start to capitulate to the other direction, right? People start to bottom out in the form of higher lows in price action in combination with a good news catalyst headline. For example, trade negotiations between you and the United States and China actually start to both derail their kind of escalation of things. So short term, I still remain on a price action basis, bearish, but sentiment wise, I don't like to sell or short the market when the whole market is already super scared and everybody is assuming the worst. Because as we saw yesterday, one sign of good news could send this market ripping higher. And that is why it is so hard to be bearish over the long term, is because the market looks for that opportunity. Everybody's already assuming that the worst is going to happen. So if any good news comes out, boom, we're up 5%. By the way, the Edge Finder sale is ending soon. You can currently get 40% off of our software tools to help traders to spot more opportunities in this crazy market. I've been saying this a lot here recently, but I do think it's very important that in times like this, we focus on the data and not the news headlines, because the news headlines are so violent and they get people all sorts of emotional. And I actually think it's really important that we just stay closely paying attention to the economic data, sentiment data like I just discussed. We can see that there's some scary stuff happening happening in the world, but everybody is already scared. So that's where you want to be careful chasing and doing what everybody else is already doing. Take a look, for example, at the Bitcoin to gold ratio, which continues to trail lower as investors drastically prefer buying gold here to Bitcoin at this time. This is a pretty good indicator of a risk-off looking market when you have people rushing to gold and selling things like Bitcoin and stocks. Speaking of gold, here's an update on my position. Gold is going very well so far and actually keeping my portfolio nicely in the green today, despite the carnage in stocks. I have a good sized position long gold, and I actually trimmed my stop loss slightly here to account for this nice reversal. I wish I had more entries that look like this, and if you know, if you've been watching my videos, transparently, I took a long position here that I stopped out on. So I don't want to ever come across on my YouTube channel as only showing my good trades. I do have bad trades like every other trader on planet Earth, but I did get a really nice entry. I waited for this one and actually did add a little bit more size to this attempt than my first trade. So far looking really good. And what I'd like to see from here is follow through, right? So I've trimmed my stop just a bit off of this rally and breakout through yesterday's highs, but what I'm looking for in order to trail stops would actually be a return and closure above those highs for a chance to take my stop loss and move that into profit. This has been a very nice hedge, and so far my portfolio this year is still red due to a lot of the stocks that I've been buying that have continued to go lower, but I'm doing far better than just passively holding the S&P 500. And for me personally, that is something that I kind of gauge my trading performance on over the long term, is relative to the S&P 500, because if I wasn't trading, that's what I would have my money parked into. So that's kind of a way that I grade my own trading. So even though I'm down a couple percent this year, the S&P 500 is down, 15+% or whatever year to date. But there's something going on that I want to discuss with this gold move. Why is gold up so much today? And at the same time, we have a drastic move lower in US Treasuries. This to me is very concerning and is signaling something about the gold market. I actually think that there's a possibility here that we see dollar index lower, we see treasuries lower, as the Chinese investors of the world actually hold a large amount of US treasuries. While they have been offloading them in recent years, I'm wondering if there's potentially some acceleration of that trend, selling US treasuries, selling US debt, and instead taking that capital and pushing it into gold instead, as the US and China seem to be going into yet again another trade war. You have to remember, while the US and China are rivals, they also are each other's biggest customers. And when we think about this, right, US treasuries have been a huge purchase over the last few decades by Chinese investors, and perhaps we're seeing a little bit of an unwind in that. I think that's really concerning because right now there's a lot of questions about how much of a safe haven really is the US dollar. Is it the global reserve currency, or is that being challenged? I mean, obviously it still is. And I had this exact conversation earlier with Johnny and Kenny from the Market Insights podcast. Check this clip out.
The thing about this situation, though, is for so long, the world has seen America as the safe haven. And this has been in the form of the buying, the purchase of, long-term US government bonds and so on. But now we're seeing aggressive selling of those government bonds, particularly in the last 48 hours. And that is not typical behavior, because it's always been considered, the USA, as the safest of safe haven assets. So I would think for many, that is the chief concern, really. Are we seeing a changing of the guard permanently, a changing of the system? Or, as we were saying off air just now, Kenny was saying, well, people have short memories and things could revert back to where they were. I mean, this is down mainly to one man and his administration, and I suppose you could have a new administration and a new guy in charge. But will the world see the USA in a different place for good?
Well, one thing to think about is that round one of tariffs, many of which the imposed tariffs on China actually stuck with the Biden administration. So there is, I think, some bipartisan thought process that tariffs, trade negotiations do need to happen to a certain degree. People just largely vary on how much and how to approach that negotiation. I think trade deficits do net negative hurt an economy over the long term. It can cause inflation. These things are eroding to a government, although, the United States has done pretty well in all this anyways. But another thing to think about, you brought up treasuries. Tricky thing about this is that I got to say, just first of all, I think people, the bond buyers of the last 5 years are probably some of the most frustrated out there. You had in the 2022 sell-off, markets crashed everywhere and there was nowhere safe to hide, not even treasuries, because of course inflation went viral. And up to about, 3 days ago, bonds were starting to look really attractive to many investors because U.S. treasuries, okay, well, if we're going to go into a global slowdown, where you want to be, you want to lend to the U.S. government, this, as you mentioned, the safe, kind of reliable, steady Eddie place to invest. Well, who's a big investor in U.S. treasuries? China. And China and the U.S. are clearly, they're going at a big bout. Now, of course, China has pulled back on being a buyer of U.S. treasuries in recent years. Here's an update on the euro trade. Things are looking pretty good here so far. I continue to hold my long position down at 1.079 and looking to take profits on this trade if we can get a move up to 1.12. I've been talking about that on the channel here a lot recently. I do continue to hold this position and will update members if I make any changes to this trade. Just a reminder that you can see every trade that I'm taking within our Discord community. If you are not already a VIP member, the link and promo code can be found in the description down below. I'm also long the New Zealand dollar, which has just come back here to break even despite NZD, or the RBNZ, the Bank of New Zealand, basically actually cutting their interest rates, and yet the New Zealand dollar trending higher. Part of the reason for the trend higher, however, I think is more based on what's happening with tariffs and US stuff and all that craziness, right? The US dollar has really gotten hit hard, which is helping my NZD USD and Euro USD longs. But we're back to break even. I'm going to continue to hold this trade. I'm also stuck in a CAD Swiss long position, or actually two small positions, but I want to talk about this just for a second. I do have a dollar cost averaging approach that I use on Forex pairs, primarily focused on fundamental analysis. And while I'm early to the CAD Swiss trade, clearly, as I am in some drawdown, I actually think that there is some potential for a bounce back in this currency pair. The economic data score within the Edge Finder still looks pretty good, focusing here only on growth, inflation, and labor statistics. The Canadian dollar, I actually think, can hold out better, especially if we get some positive trade negotiations between the United States and Canada. So I have an initial position that I took right here and added to the position yesterday. Still a bit early on this, but I want to talk just briefly about this. I have a very small position here and a very small position here. And if this thing continues to tank, it's not a big deal. I can continue to look to add at key levels that I like and scale down my position, averaging my cost lower over time. Now, this is not martingale. I'm not doubling my bets every time, and I'm not making a massive bet that this thing's going to reverse. And if it doesn't, I'm going to blow the account. I have a very tiny position on each of these with willingness to scale into this and dollar cost average down, because I do think that the bigger picture is that we'll get a nice bounce back or even a potential continuation higher for things like CAD Swiss if we get positive news in regards to trade negotiations. Dollar yen continues to tank lower here as risk off currencies like the Japanese yen are doing very well today, especially against some of the higher risk currencies, especially like the dollar here today, which is under a lot of scrutiny, but also things like dollar Swiss moving lower, dollar CAD, pretty much across the board, the dollar is quite weak. And today's video is sponsored by DNA Funded. If you have not already checked them out before and you're looking to get funded this year, check them out using the link in the description down below. There's also a promo code that will get you a nice discount off any of their challenges. Use code A1T20 to take advantage of the discounts available for my subscribers. They offer profit sharing up to 90%, payouts in as low as 7 days, and you can trade pretty much anything with DNA Funded. They have a very large selection of assets tradable. So do your due diligence, see if they're the right firm for you down below in the description. Today's podcast episode with Johnny and Kenny was a very, very good one, and I highly recommend that you listen to the full thing using the link in the description or in the pinned comment of this video down below. But here's some more clips from today. Perhaps there's something really interesting here happening under the surface. In fact, Johnny, check this out. We have TLT, the US 20 plus year Treasury bond ETF, down about almost 3% today. That's following yesterday's down of about 1.9%. And on that same day, gold is up 2.3%. We know in recent years that China has been massively accumulating gold. Central banks around the world have been doing so to potentially de-dollarization. Could we see an acceleration of that trend, selling US treasuries, selling US dollar, buying gold? I don't know. It's a very interesting story. And, to me, not so coincidental that those two moves are happening together jointly at the same time. Many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things. All of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.